David Steinbach, Global Chief Investment Officer at Hines. They're the real estate folks, do it all on the commercial real estate side. David, talk to us about, you're out here in San Francisco, you're meeting here with a lot of folks here that has some technology bent. How is AI and this kind of explosion of investment in the technology space, in AI in particular, how's that impacting your business in commercial real estate?
Well, yeah, thanks for having me. I think there's really two impacts, right? So one impact is being felt here locally, right? So we're in San Francisco, so that's without question, dominating a lot of leasing conversations. And, these AI and tech companies, interestingly enough, are doing long-term leases because, all these concerns on labor and the future of office. But it's interesting that they're actually signing up for a lot of leasing. And they've about 7 million feet of leasing the last 2 years. And so that's interesting just by itself. So that's driving, I think, a wave of optimism for San Francisco. And I think capital is going to respond to that. And conviction is coming and is already here. But then more broadly, without question, what's happening here in the Bay Area in terms of AI is changing the way everything's working, right? And that real estate will not be immune from that because at the end of the day, what we build is where people live and where they work and how goods move. And so as that makes its waves through the entire global system, real estate will be impacted, just like everything else.
So we see a revival in San Francisco real estate, but is it a zero-sum game? San Francisco wins and someone else, another region, loses? Silicon Valley maybe loses, or maybe just people's home offices lose?
Well, I think the way I see it is the global economy is growing. And so this isn't, to me, zero sum. I think this is true growth. It's a new industry that is finding its legs and finding its obviously way forward. A lot of energy around it. I don't see it as zero sum.
Talk to us about just we see the growth in commercial real estate because there's so much. The economy is growing.
Right.
Certain parts of technology growing dramatically. But in a place like a San Francisco, maybe even a New York City, for example, maybe even Austin, Texas, affordability for folks to kind of live and build family, that's a big issue. How does that factor in when you're thinking about where to allocate capital?
Well, our biggest, without question, especially in the living sector, according to our math, the U.S. is about 2.5 million houses short across the whole country.
I don't know how that happened, but
I know.
I don't know.
Well, we can blame the financial crisis for part of it, right?
Exactly, because we were oversupplied at one point. Now we're undersupplied.
Yep. So
that is a thing. And on top of that, the financial math right now to give a signal to investors to build is not there. So normally there's a spread between the cost to build and the cost to buy, and that spread represents the risk you're taking to build. And right now it's not there. And so rents will need to grow or interest rates will need to come down. One of the two will need to happen. Our perspective, though, is that we need to build more to solve this problem. I mean, that is the way to solve this problem, is to build more. And so that's how we see, and any help we can get from cities and making the zoning entitlement easier. But fundamentally, the math is going to need to work for investors to respond.
Okay, so we spent a lot of time at Bloomberg talking about the Federal Reserve and interest rates and where it's headed. Will lower interest rates help you build more?
Lower interest rates will certainly help that spread that I'm talking about, but also a little bit of rent growth to the system is going to also be that signal that investors are looking for. Here in San Francisco, we're starting to see rent growth back in multifamily, and that's something we haven't seen for a while. Or office, this is the best quarter in office leasing since 2014. Wow. It's been a while. And so those signals investors are paying attention to, and they'll respond with capital.
What other parts of commercial real estate are you guys focusing on these days?
Well, look, I mean, the digital economy is playing out in so many different ways.
Yep.
Things around powered land to data centers, all that is interesting. Living is very interesting globally for us as well. But right behind that, logistics is still going to be an important thing. And I think as we're in this era of deglobalization, national resiliency is going to be a theme that's going to require a lot of development to support different outcomes that governments want and companies want in terms of having resiliency around their supply chains.
When you say logistics, we're talking warehouses? We're talking
warehouses. We're talking about even the flow of goods has altered a bit. So some ports are going to be more important than others. But also there's a lot of reshoring happening because of maybe it's national security concerns. So that's also driving demand.
30 seconds. If you want to go out and get a loan, capital, can you get capital to build stuff?
Well, the capital needs to be rational, right? So the returns have to make sense. Yes, the capital is there, but it needs to financially pencil.
The math needs to work out.
The math needs to work.
Funny how that happens. You need the math to work. All right, very good. Appreciate getting a few minutes of your time. David Steinbach. He is Chief Global Investment Officer for Hines, joining us here in San Francisco.
This has been a great event.